Welcome to Fibocan's YouTube channel. I am Prabhu KB, CEO of Fibocan. As you are aware, we are into the business of enabling wealth. We enable wealth through training, coaching, mentoring, enabling clients devise their own investment strategies through technology products and solutions victory, innovative investment strategies, so far, Sonifar and Baumits. They are very powerful and efficient strategies and work on all market conditions. So as you are aware, in our company's YouTube, Fibocan's YouTube, we have released 1 to 16 educational modules starting with banking and up to income tax on derivatives. I would request everyone to watch the videos. In fact, encourage your friends, relatives, those who are studying from 10th, 11th onwards, HSC onwards, definitely they should see module 1 to 4, and somebody at the degree level, undergrad level and MBA, BBA levels 1 to 8 they should see. Anybody interested further in technical analysis and other things can see from 9 onwards, but 1 to 8 it is financial literacy. I would request everyone to please watch the video, and if you have people, kids of age or children of the age from 16 to 16 onwards till 21, 22 or any age for that matter, please encourage them to see that so that it will enhance their knowledge. The second point I want to say is that in the daily videos, you might be aware that Kirtana is speaking every day on daily videos and she is doing a fabulous job. The reason is she has put in a lot of hard work. She has understood the technical analysis, the markets and perseverance with determination. That's the key quality of Kirtana, which is why in 2 months' time she is able to do a fantastic job. Now, let's go to today's video. Today's video will be discussing about the global markets. As always, today is 18th March 2023, Saturday. As always, the global markets for the previous week, that is week of March 13 to 17, Dow, Nasdaq, S&P, FTSE and volatility index, dollar index, commodities, that is oil, currencies and other things we will discuss. To begin with, Dow. First, we will discuss the rates. Dow closed 31,858.89, 0.2% down, while Nasdaq closed 11,630.51, 4.4% up. S&P down 1.4% down at 3916.64, while FTSE closed significantly down at 7335, 5.3% down. So, what had happened? Last week, if you recollect, before that, what had happened? Last week, before the SVB bank, that is Silicon Valley Bank collapse came in, before that, market had priced in 25 bips, that is 25 basis points hike to be done by Fed in the March 21-22, that is next week, Tuesday, Wednesday meeting. So, at some point in time, when the CPI print had come in the US, the market had even factored 50 bips hike. That means another additional 25 basis points hike. That means market had severely negative market. It is severely negative for market, particularly for technology related companies. Okay. So with that backdrop, suddenly Silicon Valley Bank issue, SVB Bank, which is a regional bank, came all the way. I'm not going to go into that issue because that itself will be a separate topic. SVB issue came all the way like a cyclone. It came like a cyclone or a tsunami, whatever name you want to call, and it swamped to the global markets, and there was heightened fear across the global markets. And what had happened, SVB was on the verge of collapse. Fortunately, like any other central bank, the US government and US Fed, all these entities came together and said that they calmed the market. How did they calm the market? By giving assurance that every deposit holder's interest will be protected. That means the deposit holders, they will get their money back. Of course, equity stakeholders, they have to face their fate for any other company, but depositor holders, interest has to be protected. This is always I have been telling in my educational videos also. Any central bank and government will allow any company or any industry to collapse, but not the banking industry, because that's the backbone and the economy of any industry. Also, if there is a contagion effect or the systemic risk effect, that if it happens, it is going to have a catastrophic impact not only within US, across the globe, which is why every central bank, there will be a consortium efforts to protect the interest of every bank in the country and today across the countries. Okay. So what had happened with that background, there was a signature bank issue also that had come in. So hence, like the overall the sentiment was extremely negative, which has now pushed the theory of 50 bips hike to down to 25 bips hike. And also some people say even there won't be any hike at all. In fact, some go to the extent of even saying that there will be a cut of 25 bips. Okay, which is why you are saying that it is positive for Nasdaq and negative for it is positive definitely for Nasdaq if rate hikes are not that much. While why Dow and other Indian indexes are falling, particularly banking index, because across the bank there is a fear that banks are nobody knows about the soundness of the banking system, because 2008 crisis is still lingering in the minds of people, one who has seen that crisis, which is why there is a fear psychosis that is set in across the market. Okay, without background, now what had happened last week, Dow had formed a solid big red candle and closed below the Bollinger lower band in the daily chart, in the weekly chart. This week what happened, it opened the gap down lower but did not go down, and bulls managed to take it up above the Bollinger upper band, but finally bears took control. It formed a small but solid green candle. Normally when the trend is significantly down and when there is such a big red candle, after which there is a green candle and a doji or a spinning top type of a candle, basically the selling is arrested, and near the key levels of Bollinger lower bands or resistance levels or support levels, normally it means that the next candle will be a solid green candle, which means a morning star candle. That is what we call combining the big red candle, the small green candle, and the next the would be forming green candle. When you combine this, it is a morning star. So I expect a good solid green candle next week. Okay, or at least the initial phase of the week it might go up, and then based on Fed's outcome it can come down also, but there is a chance that it will be a good up move you will see on Monday and Tuesday. That is what the sentiment, the structure of the market is as far as Dow is concerned. So Dow again in the monthly chart, Dow, Nasdaq, S&P, FTSE all, the low of March is lower than the February's low, but the Dow, Nasdaq, now S&P and FTSE, FTSE you forget it, Dow and S&P is nowhere able to close above the February close till now. Of course, we have to see at the month end only, but even now, whenever it goes near the close of February, there is a selling pressure that is coming in, it is pushing, whereas Nasdaq is something which is holding. We will see when we discuss about Nasdaq. Nasdaq, what happened last week? We said that it formed a solid red candle and reversed. So it went below decisively the 50 and 200 week moving average. What is 200 week moving average? 4 years we average. So which is something extremely negative. However, what happened this week, because of the events that I discussed, there is a good amount of short covering. Now it is staying above both 50 and 250 week moving average. Okay, in the monthly it has formed, though it went below the previous month's low, it has formed a solid green candle with a long lower leg. If it closes somewhere here, it is definitely bullish. Okay, but coming back to the weekly once again, is the week, can we say that it has decisively broken above the 50 and 200? The answer is no. The answer is clear no. Why? Because last week it decisively broke down. This week it has closed about just above that 50. Okay, it is a matter of time before sentiment turns negative, it can come down decisively. Hence, no, unless otherwise we see it decisively going above and staying above the 50 week moving average, we will not be able to decide anything on the course of the next movement. Okay, so while Nasdaq is looking strong at this point in time, which is why our Indian IT stocks are also relatively looking better. On the S&P is more or less mimicking the Dow, because Dow and S&P are more or less similar. So S&P also last week it formed a solid red candle but didn't break below the lower band. This week it formed a solid green candle. I would call a more of not a piercing, not a bullish engulf, but a bullish harami type of a candle one can call. And again, there is chance that it can form a doji or slightly go up next week, depending on how the other events pan out next week. Okay, So this again is below the 200-day moving average or in the daily like Dow. Okay, while Nasdaq is looking strong. Okay, on the FTSE, what did we say? Last week we said that it formed a solid red candle and it is showing cracks. The crack really happened, big crack happened. It formed a solid big red candle and came down. Came down where? It is now touching the 100-week moving average. Just below the 50, it has broken down the 50 and touching the 100-week moving average. There are two things that it can happen. It can form a sideways candle here, or it can form sideways, then next week it can continue its big fall. In the daily chart, what FTSE formed, if you recollect, last week we said that it has broken down the 50-day moving average. Below there was 100, below there was 200. In the last 5 days, what did it do? It broke all the moving averages, that is 50, 100 and 200 decisively. That's very important. The word decisively is important, because of which you are seeing such a big fall in the weekly, and in the monthly we said that first it is showing a reversal. It formed a solid red candle till now, and if it turns out to be like that, it has already broken down the exponential moving averages. Even in the monthly it might go towards the moving averages, simple moving averages, which is not a good sign. So global markets, particularly FTSE, is the weakest of all, and strongest of all is, at least at this point in time, is Nasdaq, Dow and S&P in between. That's why you are seeing Indian markets, it is just going below but trying to go up, but it's not able to close above the February month close. That's the problem. When we see then S&P VIX, CBOE VIX, what is VIX? It is 25.51. Last week it formed a solid green candle and moving towards the Bollinger upper band. This week it touched the Bollinger upper band. Of course, it formed a higher wick, which means it went much above, but finally managed to close touching the Bollinger upper band at 25.5. That means the VIX volatility is high, which means it is not low, it is medium to high, which means you will see further volatility in the coming days, because VIX is strong. VIX strong means volatility is going to be strong. That is what it is. Next we will see dollar index. Next, dollar index. Dollar index closed at 103.520. Last week what did we say about dollar index? We said that in the weekly chart, the 50-week moving average is acting as a strong resistance. That is what had happened. Last week, it formed a red candle. I mean, in fact, the 2 weeks before, it formed a green candle, but could not close about decisively the 50-week. Last week, it formed a solid red candle. So 50-week pushed it down. Last week it formed a doji, which we said that means it will be difficult for it to cross the 50-week moving average. This week what happened? It opened a gap down and formed a red candle, and now it is below the exponential moving average. However, what is happening when we analyze the daily chart, which if you would have recollected, I said that the 50-day moving average is acting as a support, but 200-day is acting as a resistance. What is 50-day moving average? Somewhere around 103 levels, while the 200-day moving average is 106 levels. Okay, so 50-week is also somewhere there. So that is why it was pushing it down. 50-week is 104 point some levels. Okay, it is pushing it down. In the daily chart, what had happened in this week, it went below the 200-day moving average for a brief period of 1 day. The next day it formed a solid green candle, and then once again in the last 2 days it fell, but again it is coming near the 200-day moving average, which is at 103.287. That will act as a very strong support. It requires lot of strength and power to break it down, which I don't think it is going to happen in this month or even the next month, because we expect, if you recollect, we said that it is going to be a sideways. That's why 1 day going up, 2 days coming down, but largely the 50 and 200, it is operating within the band of 50, 200 day at the support and 50 at the support and 200 at the resistance. That is what it is. In the monthly, again it formed a solid red candle, a piercing, a dark cloud, bearish dark cloud type candle, and below the exponential moving averages. Now, when we analyze the individual components, Euro versus USD, obviously it is going to be the opposite of what I said. It closed at 1.0668, and last week, previously 3 weeks back, it formed a red candle. The last week solid green candle. Last week it was a doji, which we said, and once again we said that it is sideways. Obviously, Euro versus USD and all these individual components, if they move sideways, then only the dollar index will move sideways with downward bias. So, Euro versus USD sideways with upward bias. Okay. So, what happened this week? It formed a solid doji with a big upper and lower, equal amount of upper week and lower week. What is doji? Indecision. So, once again in here, if you see here in the daily chart, it is the opposite of it. What is the opposite of it? It is the 200-day moving average, which is acting as a support, while the 50-day is acting as a resistance. So, it is hovering between the 50 at the top and 200 at the bottom. Whereas dollar index 200 at the top, 50 at the bottom. Okay, it is taking support at 50, it is taking support at the 200 and bouncing off nicely. And in the monthly chart, once again it formed a solid green candle, but it is a small candle. You can call it as a bullish harami type candle. So, GBP USD, it is also more or less the same, but with slightly more powerful than the Euro against USD, whereas GBP is slightly stronger against the USD. It formed in the weekly, last week it formed a doji, now it formed a solid green candle, and it is above the 50-week moving average. It was below it. Now it has gone decisively above the 50-week moving average. In the daily chart, this is one thing which is really looking strong. It has decisively taken all the moving averages, 50, 100, 150, 200, everything it has gone above that, and it is moving towards the Bollinger upper band, which is why in the monthly chart, this currency, that is GBP, is showing excellent strength, and it has formed a piercing pattern, bullish piercing pattern till now. And if it were to close around these levels, you can see some more up move in this, but GBP is strong against USD. Relatively, Euro is not that strong against USD. So, next when we analyze the USD versus JPY. So, USD JPY, if we had recollected, we said that the 50-week moving average was acting as a resistance. Precisely that is what had happened. Last week it formed a red candle. Last week it formed a big red candle, upper week, long upper week, which means we said that that is facing a strong resistance. This week the 50-week pushed it down. What had happened? Solid red candle. Now it is decisively below the 50-week moving average, and below which is the 100 and 200-week moving average. That's quite a distance below. Hence, no, it will not go to that level now. In the daily, it is sliding down nicely and going down. The trend is down, beautiful trending down, and now broken below the 50-day moving average also. Earlier, it broke down the 100, next the 200, 100, and now the 50 is also broken, and it is below the Bollinger lower band. That means the trend is down, but any up move, first it has to cross the 50-day moving average decisively, then it has to go up. It is at 131.80 current price. Next, on the JPY on the monthly chart, it has formed a solid red candle. Last month it was a solid green candle. It formed a solid red candle. It is more of a, I would call it as a slightly lower. If it comes down, it will be an engulfing candle. But notwithstanding that, we don't expect significant fall in the next month, because we might even see a opposite candle that can be formed, because overall the trend is sideways with the dollar index negative, but with the USD JPY showing GBP is the strongest against dollar, while JPY is also strong. That's why it is reflecting in such candles. Next is USD INR, all our interest. USD INR closed at 82.530. Last week it formed the previous week it formed a solid red candle, after which it formed a small green candle, solid green candle, and now it formed a morning star green candle, which is a morning star pattern, and by forming this it has closed above the exponential moving average and the Bollinger middle band in the weekly chart. In the monthly, what it did, if you had recollect, we had said that it broke below the 50 and 100 decisively last week, but once again this week it managed to go above that, because 200 day is somewhere at 81 levels. That means no, it will go up and down and somewhere go to 200 levels, and then it will really take off or break down. Okay, anything can happen. But looking at the daily strength, in the last 2 days it fell, but notwithstanding that, it is not breaking below easily the 50 and 100. So that is acting as a support, though it broke it for briefly for 4-5 days or 6 days, but that is acting as support. But however, still our position is that in the monthly it is forming a rounding top. That means don't expect significant up move, but down move will also not come unless otherwise at some point it breaks down the 200-day moving average. We don't expect big downfall. Next is the US 10-year Treasury yield. US 10-year Treasury yield, last week if you had recollect, we said that it formed a solid red candle. It's more like what you call falling tree methods. Of course, it came after the after 4 green candles. This week it continued its downfall and formed yet another solid red candle. And now what is happening? It is the 50. It is just above the 50-week moving average, below which is the 100 and below which is the 200-week moving average. And in the daily chart, it is more or less forming like a JPY USD chart. It is forming solid red and green candles but trending down. So it is below the Bollinger lower band. In the daily, it has broken all the key important levels. What is the key important levels? 50-day moving average, 100-day moving average and 200-day moving average. It has broken the last resistance point of 200-day moving average, which is at 3.563, which means that if this trend continues, already in the month it has formed a bearish angle, that is, it has covered by forming a solid red candle the previous solid green candle it formed in the month of February. So that means it is now near the Bollinger middle band and the exponential moving average. It is now near the Bollinger middle band and the exponential moving average. Middle band is slightly below. So we expect this to go down in this year. So hence now US 10-year yield is not going to yield anything in this year. Okay, which might be a good sign. Anyway, that's a different story. Now let's go to Brent. Brent at 72.48 and Nymex at, we will read Nymex at 66.31. Both, as you know, forming similar charts and similar pattern. What is the similar chart and pattern it formed? Similar chart and pattern it formed in the weekly. In the weekly, it is now decisively below the 50-week, 100-week. The only support that is available is the 200-week moving average at 70.49 for Brent, and for Nymex it is at 66.18 because Nymex closed at 66.31. So the 200 week, what is 200 week? As you know, 4 years average. That means 4 years average, it is hovering at the 4 weeks average, and not only that, it has gone down to that level and it is not showing any reprieve of going up, which means the global economy is weak. That is what it signifies. Okay, and also in the monthly, in the daily chart, significantly trending down and below the Bollinger lower band, way below all the moving averages, which is an excellent sign. As an Indian, I am very happy to see this chart. And in the monthly chart, what is happening? It has broken down the 200-month moving average. What is 200-month moving average? 200-month is at 77.73, 200-month moving average for Brent, and for Nymex, it is 200-month is 72.62. What it means? What it means? In the what it means 200-month means how many? 4 years. 4 years average. So I would request, using my platform, I would request and urge I am apolitical. First, let me tell that I don't belong, I am not affiliated to any political party, nor I support any political party. I am an independent person, independent, free thinker, intellect. With that intellect, I am humbly requesting state government, central governments, whoever responsible authorities, sit, see the charts. You can watch my video or see better analyst than me, technical analyst, see where it is going to be there 6 months, 1 year down the line. If it is going to, if you are going to feel that it is going to remain at these levels, the reducing the oil price is going to immensely benefit the common women in the first village or the last village, whichever you want to call. With that note, I end my presentation today. Thank you very much.